Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Thursday, October 21st, 4:43 p.m. Eastern Time, coming to you from the financial capital of the South, St. Augustine Beach, Florida, with tonight's Revere Market Insight video. Let's get right into it. We've got some big news from intraday and some big news from after hours that could impact tomorrow's action. So starting off with state of the market, we continue to be in an uptrend. In fact, we're in an bullish posture across all four timeframes slash events. Not an event really, but time frame and market leaders. Let's just say that we separate those out because sometimes they outperform, sometimes they underperform, but in this case they're doing what the averages are doing, actually doing a little bit better. Market leaders in a bullish uptrend. Short-term moving averages, this means that all of the 5 major averages that we track in each video are trending above their respective moving averages. The short-term 21-day exponential moving average, the medium-term 50-day moving average, the long-term 200-day moving average. What happened today, though? S&P 500 first hit resistance at the 44.42 to 44.46 level. That was all-time highs, but broke through it by the end of the day, along with mid-caps making an all-time high. But after hours, Snapchat with a revenue miss, blaming it on Apple's privacy changes in their iOS, and that is trickling through any software company or social media company that generates ad revenue. So that's setting up for a gap down tomorrow in the NASDAQ and all of these stocks, and we'll take a look at those charts momentarily. But today, G5 continued to outperform. That's our internal Revere composite of 5 growth ETFs that we track to verify the health of the growth stock market. Up 1% today, continues to outperform and act very well. S&P 500 up 0.3%, NASDAQ up 0.61%, but given all of that back after hours. Dow Jones Industrial Average just barely negative, mid caps up 0.34%, Russell 2000 up 0.3%. Let's get to the market facts and the key levels. But first, let's get to the team running Revere here. And very nice bounce in the indexes, and also confirmed by our client accounts as we were able to get quickly back on the right side of the market. And that's mostly because leaders held up very well relative to the indexes during this most recent correction. And if you're interested in an advisor that takes a technical approach to the market, that participates in uptrends, gets out of the way in downtrends, give us a shout. You can email any of us, Dan, Tim, Hunter, Muriel, Alex, or Don at revereasset.com, or phone 855-REAL-WEALTH. That's 855-732-5932. And now to the market facts. As I mentioned, we continue to be in an uptrend since the October 14th follow-through day. Headwinds continue to battle the market, and that's rising interest rates and the strong U.S. dollar, although the dollar has been consolidating and not going higher recently. Tailwinds, sentiment, and the put-call ratio. Bull case, we want to stay above the 21 and the 50-day moving average. We haven't had our first pullback attempt into those levels since the follow-through day. And the failure case, or the bear case, would be a break of those moving averages, and worst case, a break below the 4,300 level. That's our bearish line in the sand. I mentioned about the action today with the S&P and the mid caps hitting all-time highs, but ad stocks on alert tomorrow. This is Google, Facebook, Twitter, Roku a little bit, Amazon even. After hours, as I mentioned, Snap with a big, well, it wasn't that big, but I guess the reason that they gave with that iOS privacy issue, that's going to impact anybody that has an app on iOS. So we'll take a look at those stocks momentarily. Strong sectors today: semiconductor, software, transports. On the weak side, oils, base metals, banks. Strong recently, a little bit of a pullback today, and Bitcoin giving some back today. And we closed at 45.50. That puts us above all four of these bullish levels, at an all-time high, above the ADMA, above the 923 high, above the 50-day moving average, and that is going to be crossed either tomorrow or Monday by the 21-day exponential moving average. That's a bullish cross. So as long as we stay above all of these key levels, the market's in good shape. Break below, and then we're eyeing this 4,300 to 4,430 prior pullback range. We get into there, we will have lightened up quite a bit, and the line in the sand, the 4,300 area, the 200-day moving average down around 4190. So let's get to the charts. First, we'll look at the S&P 500. You can see here the gap up and follow through day on 414, and we've had 5 up closes since then. Thought we were going to get a little bit of congestion / consolidation today, which would have really been healthy, but strong last hour took us to all-time highs on the S&P 500. Let's look at the NASDAQ 100, and we'll note here down 0.6%, up 0.6% today, down 0.6% after hours on the impact to those big NASDAQ 100 stocks. I would expect money flowing out of Google, Facebook, Amazon is going to flow into Microsoft and Apple, and possibly Tesla and Nvidia. Money goes where it's treated best, and this Snap report could be the canary in the coal mine for what's going on with these ad stocks. But anyway, you can see here follow through day, 5 out of 6 up closes. We'll see if we can hold the 50 and the 21 on the pullback tomorrow. We closed 2% above, 0.6% down, so we're about 1.5% above the 50-day moving average. A bounce off there would be a positive going forward. Next, let's go to the Dow Jones Industrial Average. We'll look at the DIA, just about at all-time highs here. Continues higher after the follow-through day. Relative strength continues to lag. I would expect relative strength to pick up tomorrow versus the NASDAQ 100, as that's going to, at least the way things look now, get hit. Some of the big tech components will get hit. Mid caps, new all-time high as we broke out of this range here, not decisively, but we'll take all-time highs when we can get them, certainly. And this will go a long way, since we broke out of this triangle and continued higher along with the other indexes, go a long way to propelling the markets higher, and small caps continuing to hold this breakout of their that triangle also, which was, you can see the downtrend here, the uptrend there came to a point, we gapped up, we tested it on a pullback, and now 3 up days off of that test on the bounce off the ADMA. So this is exactly what we want to see. Let's go to the chart of Snapchat now, since this is the big news after hours, down 23%. This is going to put it below its 200-day moving average. So last earnings report, big gap up on massive volume, 24%, but it never really made any progress. We were in and out of this, got stopped out on it a couple of times, and it was just there was some talk about this, how this privacy settings on iOS may be impacting these companies, and the fact that we never made any progress on price or a relative basis. And Snapchat, it seemed like every attempted move was sold, although the volume wasn't necessarily there. Wouldn't be a surprise to be a lot of people in this stock, and when they head for the hills, these hedge funds and growth people, when growth slows, they get out quick. So I would not be advising a dip buy in any way, shape, or form on Snapchat, or really on any of these. Let's go through the other ad-related stocks and see how they're doing after hours. Facebook down 5.5%. They haven't reported yet. They report next week. Google, obviously with their operating system, may not be impacted as much, and any Android apps not really affected by this. But Google's still down 2.4%. Twitter down 5.2%. I saw where Roku was getting impacted also, although I think that might be a baby out with the bathwater type thing, but Roku still down 3%. Let's see if there's any other major of these companies that are getting hit. The Trade Desk and Pinterest, let's take a look at them. Pinterest down 3.5%. How about Etsy? Etsy down 2%. Trade Desk down 5%. So ad stocks beware is the theme for tomorrow. Keep an eye out on that. Let's see what else we want to take a look at today. Ambarella, our biggest position in GROTECTION, continues to trudge higher, riding this 80 MA all-time high close. Had a pullback intraday down to 170, but went to 177, back down to 170, and closed right near 177. So that continues to act very well. We added to Tesla after not a big, kind of a muted reaction after hours in pre-market, but once trading started, big volume came in on this early, ended up 74%, not that impressive, but up 3.26% price-wise, up into this 900 area. The all-time high is $900.40. Today it hit $900 on the nose. So let's see, and look at the relative strength going all the way back to mid-August on Tesla. The relative strength line, I don't know what I would do without it, because it's not just a matter of what the chart looks like. It's a matter of what the chart is looking like compared to every other chart that's out there, and that's what the relative strength line. That's why it's so key. And let's see, we also own a firm that had a nice update today. As it consolidates its recent run above 150, I'd like to see a volume dry up on this and a bounce off the 80 MA. To add to it, these are pretty volatile stocks, so we've got very small positions on this. We're looking for very low risk entries to increase our size. Upstart has been 4 red days in a row after a quick run from 300 up to 400, given a little bit less than half of that back, and it's certainly entitled to do that. I would expect this 346.54 level, if it touches that, to provide support, and the 21-day exponential moving average is coming up to meet that. Zscaler had a nice day. We don't own this, but we own CrowdStrike and PanW. PanW underperformed today, and that just continues to be the king of the world on this slingshot move higher. After this big gap down, got everybody out right around the 110 area. Well, not everybody, but it sure as hell did get me out. But look at the big blue bars of volume on this ride up. The mistake was obviously not getting back in even a small position, because once you're in small and you've got gains, that gives you the cushion to add more to it. So definitely something I'd rather have a mulligan on. Was getting out of that one. After hours, CMG, that's flat after hours. Let's take a look at CMG. Under the 50-day moving average, but it is a leader, and it did hold the 1800 area. That's going to wrap it for today. A little quick report, and I'll be back, though, with the big show on Friday, and we're also releasing our podcast early. We did it today due to scheduling conflicts, so be on the lookout for that. And as always, I'd like to hear from you. I can be found on Twitter at Vandenbord, email don@revereasset.com, phone 855 Real Wealth. Let me check my notes quick to see if there's anything else that I want to mention. I did mention how we added to Tesla. We did get into URNM today. This is a uranium miner, big 2-day move off of this consolidation, nice gentle pullback on lower volume, forming a cup. It's kind of a compressed cup, but consolidating nicely right below this 100 area. Most commodity stocks got hit today. This one along with it, but the volume was lighter, so dipped our toe into the uranium pit today. That's going to wrap it. So closing up the day ending Thursday, October 21st. This is Don Vandenbord with Just the Facts. Thanks for listening. Have a great day.